For decades, venture capital existed in a world of exclusivity. It was a domain shrouded in mystery and reserved for a select few. It was the realm of institutional investors and high net worth individuals. These were the power players, the ones with the financial clout to make big bets on the future. These were the accredited investors with deep pockets and a high tolerance for risk. They had the resources to absorb potential losses and the connections to gain insider knowledge. The average person couldn't participate in funding the next Google or Amazon. They were left on the outside, looking in, unable to access these lucrative opportunities. This wasn't by accident. Regulations, high investment minimums, and a lack of transparency created significant barriers to entry. The system was designed to keep the uninitiated at bay. The traditional venture capital model relied on close relationships between a small group of investors and entrepreneurs. These tight-knit circles were built on trust and mutual benefit. These investors often had access to deals and information not available to the public. They operated in a world where knowledge was power and power was closely guarded. This exclusivity created an uneven playing field. It perpetuated a system where only a privileged few could reap the rewards of high-growth startups. It limited the pool of investors and entrepreneurs who could participate in the high-growth, high-risk world of startups. Many innovative ideas never saw the light of day because they couldn't secure funding. However, the landscape of venture capital is changing. The barriers that once seemed insurmountable are beginning to crumble. A new wave of investors is emerging, eager to be a part of the next big thing. These are individuals from diverse backgrounds, bringing fresh perspectives and new energy to the table. Retail investors, once relegated to the sidelines, are now stepping onto the field. They are leveraging new platforms and technologies to gain access to investment opportunities that were previously out of reach. This shift is democratizing access to venture capital and transforming the startup ecosystem in profound ways. The playing field is becoming more level, and the potential for innovation is greater than ever before. As more people gain the ability to invest, the pool of ideas and talent expands, leading to a more dynamic and inclusive market. One of the most significant factors driving the rise of retail investors in venture capital is the changing regulatory landscape. Over the past decade, there has been a concerted effort by governments and regulatory bodies to democratize access to investment opportunities that were once the exclusive domain of institutional investors and the wealthy elite. Governments around the world are recognizing the need to make private markets more accessible to a wider range of investors. This shift is driven by the understanding that broader participation in these markets can spur innovation, economic growth, and job creation. By opening up these opportunities, they are enabling more people to benefit from the potential high returns of early-stage investments. They are implementing policies designed to break down the barriers that have traditionally excluded retail investors. These barriers include high minimum investment thresholds, complex regulatory requirements, and limited access to information. By addressing these issues, governments are making it easier for everyday investors to participate in venture capital. In the United States, the Jobs Act of 2012 played a pivotal role in opening up investment opportunities. This landmark legislation was designed to encourage funding of small businesses by easing various securities regulations. It has had a profound impact on the venture capital landscape. Title II of the Act allowed startups to advertise equity crowdfunding offerings publicly. This was a game changer as it enabled startups to reach a broader audience of potential investors, including those who may not have had access to such opportunities before. This opened doors for smaller investors to participate in early-stage companies. By lowering the barriers to entry, the Jobs Act has empowered a new generation of investors to support innovative startups and potentially reap significant financial rewards. These changes, along with others, have leveled the playing field, making it easier for retail investors to get in on the ground floor of potentially high-growth companies. This democratization of venture capital is fostering a more inclusive investment environment where diverse voices and perspectives can contribute to the success of new ventures. Regulatory changes are not just happening in the US. Around the globe, countries are recognizing the benefits of opening up their private markets to a wider range of investors. This global trend is creating new opportunities for collaboration and investment across borders. Countries around the world are enacting similar measures to open up their private markets. These efforts are aimed at creating a more dynamic and competitive investment landscape where innovation can thrive and investors can find new opportunities for growth. The European Union, for example, has introduced regulations to facilitate cross-border investments in startups. These regulations are designed to harmonize the investment environment across member states, making it easier for investors to support startups in different countries. These changes are fostering a more global and inclusive venture capital ecosystem. By breaking down barriers and encouraging broader participation, governments and regulatory bodies are helping to create a more vibrant and resilient global economy. This new era of investment is characterized by greater accessibility, diversity, and opportunity for all. Technology is another crucial factor driving the democratization of venture capital. Online platforms and digital tools are making it easier than ever for retail investors to access information, connect with startups, and participate in funding rounds. These platforms provide a user-friendly interface that simplifies the investment process. Crowdfunding platforms, for example, allow investors to browse a curated selection of startups and invest with relatively small amounts of money. This eliminates the need for large minimum investments, which were previously a major obstacle for retail investors. These platforms also provide educational resources and due diligence tools, empowering investors to make more informed decisions. Moreover, the rise of artificial intelligence and machine learning is further transforming the venture capital landscape. These technologies are being used to analyze vast amounts of data, identify promising startups, and automate investment processes. This not only makes investing more accessible, but also potentially more efficient. The increasing interest in venture capital from retail investors is not solely driven by regulatory changes and technological advancements. There's a cultural shift happening as well. A new generation of investors is emerging, one that is more comfortable with risk, more interested in technology, and more eager to be actively involved in shaping the future. This new generation of investors grew up with the internet and witnessed firsthand the rise of companies like Facebook, Google, and Amazon. They understand the power of technology and the potential for exponential growth in the startup world. They are also more likely to invest in companies that align with their values, such as those focused on sustainability, social impact, or innovation. This new breed of investor is also more likely to conduct their own research and due diligence. They are using online forums, social media, and industry reports to learn about startups and investment opportunities. This increased engagement is creating a more informed and discerning investor base. They are attending webinars, online courses, and virtual investment seminars to deepen their knowledge. Networking has also become a crucial part of their strategy, connecting with like-minded individuals at tech conferences and industry events. Collaboration is key for this generation, as they often work together on projects and share insights. The use of financial apps and tools has made it easier for them to track their investments and make informed decisions. Many are also exploring new investment avenues like cryptocurrency, which aligns with their tech-savvy nature. Ethical investing is another area of interest as they seek to support companies that make a positive impact on society and the environment. This new generation of investors is not just looking for financial returns, but also for meaningful contributions to the world. Their innovative approach and willingness to embrace change are driving the evolution of the investment landscape. As they continue to grow and learn, they are shaping the future of investing, making it more dynamic and inclusive. The future of investing looks bright with this new generation at the helm, ready to take on challenges and seize opportunities.